webinars, and all our contents are available at our website. For more information and knowledge, you can visit our website fintechadvisors.com. Now, I would like to introduce our first speaker, Mr. Ravi Kishore. He is a qualified chartered accountant having 15 years of post qualification experience and a cost management accountant with All India ninth rank. Having worked with industries like manufacturing, wholesale jewelries, branded jewelries, turnkey construction, marketing agencies, and working with US clients for past 5 years. Hello, Mr. Ravi.
Hi. Yes, please. Yeah.
Uh, our next speaker, Mr. Neeraj Agarwal, who is a fellow member of ICI practicing under the banner of Messrs. Ann and Associates LLP as a firm based out of Bangalore, Mumbai, and Kolkata. He's, a, he's also registered under Insolvency and Bankruptcy Board of India as a registered valuer for valuation of securities on financial assets. He also holds a Bachelor of Commerce degree from Calcutta University. He had a corporate working experience in Wipro. After working in Wipro for a short period, he had started his own practice in late 2013 and have been in practice so far for last 10 years. He have also completed a certificate course by ICI on Ind AS in 2020 and cleared social auditor exam conducted by NISM. He have been inducted as a special invitee to the Substantiality Reporting Standard Board by Institute of Chartered Accountant of India, and he holds a license to practice in USA as a certified value analyst. Good morning, Neeraj.
Thanks, Rohit. So without
Over to
any
you.
further delay, we'll start today's session. I have with me Ravi also, who's a technical expert on USA filings and all. Now, moving from the advantages of a C Corp, we move to disadvantages. Obviously, every entity will have some sort of advantages and some sort of disadvantages. And as a practitioner or as a founder, you will have to determine what is more advantageous to you. So one of the disadvantages of a C Corp is a double taxation. C Corps face double taxation where both corporate profits and dividend are taxed. Dividend is not an expense but an allocation or distribution of profit. Then shareholders are again charged tax on individual capacity. So you are not going to take the dividend as an expense. It is considered as a distribution of profit. And then this dividend is then again charged in the hands of individuals or shareholders, and they are taxed accordingly. Compliance requirements. C Corps have extensive regulatory and compliance requirements leading to higher administrative cost. Obviously, now again, this is, I know you people will think that again and again I'm saying the same thing, but again, it's very much comparable to the Indian companies in which the private and the public limited companies have quite a few more regulations to comply with as compared to maybe a sole proprietorship or a partnership firm. So again, this point is similar to India. The details of compliance are quite high. Next point is the higher regulatory scrutiny. C Corps are subject to more regulatory scrutiny and must comply with various federal and state regulations, increasing legal and compliance cost. Again, this point is very much similar to the earlier point that since because they have so much regulatory and compliance requirement, the scrutiny on a C Corp is quite higher as compared to other legal entities, and this makes the compliance cost higher as compared. Costly formation. The initial formation and ongoing maintenance cost of a C Corp, including filing fees and annual reports, can be higher compared to other business entities. This is a general perception. It is not mandatory because a lot of things depends on the state regulations as well. But overall, if you ask me, obviously a C Corp formation will be a more lengthier and a more expensive process as compared to a normal LLC, even LLC, S Corp or a partnership firm. Final point, non-adjustment of losses. A shareholder in a C Corp entity cannot adjust the losses incurred in the C Corp with his or own personal income. Again, this is very much similar to our income tax also, that whatever losses or profit you are incurring in your company, that cannot be compared, that cannot be adjusted against your profit or losses in your own individual file. So this is quite similar to the income tax laws which we are prevalent in India. So these two were the major point of discussion for C Corp, the advantages and the disadvantages. Obviously, purely from uh, now again, you have to see what is your requirement. So if you want to raise funds, if you have a global entity, then obviously you will have to make a C Corp and not other entities. And similar to what we do in India, when we want to raise funds, we have to incorporate, generally we incorporate a public limited company or a private limited company. So more or less, as you may, many of you will know that India Companies Act is also very have taken a lot of details from the US companies laws only. So this is where the relationship is there. We can see there's a lot of similarities between the two countries. So I'll take a 30-second pause here. And if you have people have any doubts on the for C Corporation, they can just write in the chat box. And please let me know that you are able to follow the session so far. There's no issue with the audio as well as the speed of the session. In case you have anything, you can just write in the chat box. Rohit, in case if some chat box messages are there, please let me know.
Yeah, sure, Neeraj.
As of now, no messages in the
Ravi,
chat.
any point you want to add till now?
Yeah, I just want to add one point here. And in the C Corp, the companies are getting taxed at a standard rate of tax. It means like what are the revenue and what are the expenses are being deducted, and on the profit, it will be like a as of now the rate of tax is like 21% on the profit. So the tax is like in India, how we have like the tax the same way, even in the even for the C Corp, the tax rate is 21%.
Okay. Ravi, Rajat has one question. Minimum members to required to form a C Corp.
Even one person also can start C Corp.
So,
OPC.
yeah. So,
OPC.
Rajat, the concept of one person company has come from the US only. I think this answers your question, Rajat.
Yes. Hmm.
I think we can move on to the
I think
next.
Anurag Singhal has one query.
What is the, can you please elaborate on this double taxation thing? I mean, that is similar to in India also, that you get taxed on your profits, and then if you distribute your profits as dividend, there is another tax on that dividend. Is that only the similar thing, or is there
Yes,
something more to
yes,
that?
yes. It is the same concept. Same
Okay.
concept like in private limited. Like you will be getting taxed at the company, and if you distribute the dividend or if you distribute the profits, and again it will get taxed in the individual hands. This is a similar same concept.
So there is no concept of dividend distribution tax, which used to exist in India earlier.
It was there in India, but now it's not there.
So
Has
there
been
is no
same.
concept. And this both the taxes are exempted. If someone floats a company in Delaware, then there is no tax at all. Is
No,
it
no,
like
no,
that?
no, 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 no. Any company anywhere in any state, they are taxed. Delaware, why we mentioned, we will come to that point later,
Okay.
because it is not a taxation perspective at all.
Anurag, we have a slide entirely for Delaware also. So
Oh,
we'll try
sure.
to cover there.
Okay.
Sure. Now moving ahead.
Neeraj, you can continue.
Sure, Rohit. Thank you. So now moving ahead, we have the S corporation. S corporation is a special tax designation that provide pass-through taxations while maintaining a limited liability protection. And there's no equivalent of a S corporation in India. So while going into further details, I would like to ask the participants, do they know, can they think of any type of entity in India, structure in India, which is a pass-through type of entity? You can write in the chat box if you can think about any sort of structure. Okay, so I'll just give you, what about proprietorship concern? A proprietorship concern in India, purely from a trade license point of view and all, you have a separate type of entity. But when you are talking about income tax, all the profits and everything get passed on to the individual. There's no separate filing for India for proprietorship concern. So that way you can call a proprietorship concern a pass-through entity. Now, what are the advantages of a S corporation? S corp avoid double taxation by passing corporate income losses, deductions, and credit to the shareholders. That means total profits, the expense, turnover, whatever the S corp has earned, that will all pass on to the individual or shareholders of the S corp, and it is not going to be filed or taxed in the hands of the S corp itself. This type of entity right now, apart from a basic proprietorship concern, I have not found any sort of entity in India which is have a similar type of benefits. But in case somebody has a separate point, please feel free to write. Moving ahead, limited liability. Shareholders are not personally liable for the corporation debts or legal obligation. Again, this is similar to the LLCs and the companies that the shareholders have the liability is there. It's not a personal liable. Tax savings. Shareholders may save on self-employed taxes by receiving distributions instead of salary. But what is this? What is the self-employment taxes? In US, you have a concept of if you are a self-employed person, you have to pay certain amount to the government for the social security and other benefits. So now if you are a S corp and you are receiving distributions, then you are not technically a self-employed person in the US. Still, you will have to pay taxes on the salary received from the S corp and the profit as well. But you will save on any sort of add-on cost for self-employment taxes. Flexible management. S corp offers more flexibility in management structure compared to C corps, allowing for easier decision-making processes. Because see, again, C corps are going to be rigid. They are like a company. So the management structure is always going to be more flexible in any other entity as compared to C corps. Employee benefits. S corps can offer certain employee benefits such as health insurance and retirement plans, which are deductible as business expense. Very common, very correlating to India also. We can have group insurance and everything, and all these are expenses which can be claimed as a deductions. And S corp also can do that. Now, moving to the disadvantages part. Eligibility requirement. S corps have certain strict criteria, including a limit on the number and type of shareholders. The type, when I say type, it means non-resident alien shareholders, and when I say limit, it means 100 shareholders. So S corps cannot generally have more than 100 shareholders. Because of the owners such type of restrictions, S corp may have challenges in raising capital as compared to a C corp, which can easily raise funds through different modes. And this ultimately leads to a limited potential growth for the S corps because they have a limited number of shareholders. So financing through this equity funding and all is a difficult task. Finally, state-specific regulations. S corps are subjected to state-specific regulations, which can vary significantly depending on the state of formation, leading to additional compliance cost. But this is very relevant in US because in US, every state have a lot of different type of compliance part. So sometimes That is why when we move to our other slide for Delaware, you see why Delaware has more potential. Delaware has have more corporations forming their entities there because of the ease of doing business. Now, this 2 points we have covered for S corporation. If anybody has any point for S corporation, please feel free to ask. Because again, S corp is a very different type of entity which you have not seen in India.
I would like to add a point for the S corp here.
Yeah.
Uh, Regarding the S corp, you can see this S corps in US only specifically for the doctors, lawyers, where they are like in self means like self, okay, means like hospitals and all also they form like S corp. Hospitals, law firms, they all form S corps. So for us here is like a private limited, and for the professionals we don't have anything specific, right? But in US specifically for the doctors, lawyers, they form this one to have more advantage on the taxation and all.
Okay. Ritesh, you can say your question. What is the Ritesh is asking Ravi, what is the minimum amount of criteria for C corp and S corp for the capital?
$1,000.
This is same for C corp as well as S corp.
Yes, yes. Like in India,
well-
we have like 1 lakh rupees. So
I see.
$1,000 we can start.
So $2,000 is the minimum amount of capital that we require. $2,000 or $1,000?
It's $1,000. $1,000.
1,000. Okay, understood.
Yeah. Now we'll move to our third part, which is the LLC. Limited Liability Corporation, or a LLC. It's a hybrid business structure that combines the flexibility of a partnership with the limited liability protection of a corporation. It is equivalent to a limited liability partnership in India. So again, you get the context that LLC is very similar to the LLPs which we have in India. In hindsight, if you see, the entire concept of one person company and LLC was more or less taken from US. What are the advantages of a LLC? Members, owners are typically not personally liable for the LLC debts or legal obligation because they have a limited liability. Flexible management, LLCs have fewer formalities and offer flexibility in management structure and profit distribution. Taxation flexibility, LLC can choose how they want to be taxed, like a sole proprietorship, partnership, S corp or C corp. Simplified record keeping. LLCs have fewer formalities and record keeping requirement compared to corporations, reducing administrative burdens. Obviously, as compared to a C corp, the record keeping part will be lower or fewer than in a LLC. Ease of formation. Forming a LLC is relatively simple and inexpensive compared to C corp and S corp, requiring less paperwork and fewer ongoing compliance obligations. Now, this is where I think you can see a bit of a difference with India, because earlier when the LLC concept came in India, that concept was there that formation should be easier and all. But nowadays, with the name approval and whatever challenges we are having with the MCA, it feels that the incorporation process is almost similar for a company or a LLC in India. But in a LLC in the US, it is still comparatively easier to incorporate as compared to a C corp. Now, what are the disadvantages of LLC? Self-employment taxes. In our earlier slides, we have talked about the self-employment taxes. What are they? So you are taking some benefit in the US, you have social security. So if you are a self-employed person, you have to pay some taxes, some on the allocated income. So whatever revenue you are generating from a LLC, that is taxed by under the concept of self-employed taxes. State-specific regulations. LLC must comply with state-specific regulations, which can vary significantly. See, United States, unlike in India, also we have discussion on federalism and all, but it's an entirely different picture in the US. There, the concept of state power is very high as compared to the federal government in a lot of things. Especially in these type of matters of LLC, the state have a lot of regulations, and a lot of regulation vary very significantly from state to state. And that is why in our upcoming slides, you'll see why Delaware has gained so much prominence. Limited lifespan, some state require LLC to dissolve upon the death or departure of a member. So see, this concept is different. In India, LLPs have all throughout the nation one concept of if a partner is dead, it's a perpetual existence for the LLPs. But in US, some state, not all, have this mandate that in the case of a death, that LLC has to dissolve. Potential lack of credibility, sub-investor or business partner may perceive LLCs as less credible or stable compared to corporation, affecting the ability to attract investment or secure business opportunities. Now, this is also very much relevant in the concept that in countries in which this type of concept is not there, they may not even understand what is LLC. So earlier, this issue was there that in nations which do not have the concept of LLCs and all, they would not work with US-based LLCs, and they would prefer to work with US-based C corporations. Overall, with the globalization and advent of so much information online, now these type of credibility issues are getting resolved. And if the LLC have a few good years of filings and all, I think domestically as well as globally, this concept will become more irrelevant. Finally, the ownership restrictions. Some states have restrictions on who can own an LLC, which may limit the ability to attract investors or partners. So, like you saw that in S corporation also there were certain restrictions. State-wise in LLC, there can be certain limitations to attract, which will ultimately lead to investors or partner not really having the interest in forming LLCs in those states. And this is very prevalent. You will see that is why Delaware and Wyoming, Texas, these states are having a lead over other state in US. So these were the basic points of the structures of the US. We have covered the S Corp, we have covered the C Corp, and now we have covered the LLC. So till now, whatever slides we have covered, if you have any questions, please feel free to ask, and I and Ravi will try to answer it. Because now we will move to another section, which is the new law.
I could see like one question on the chart.
Just a
Yeah.
second, I check.
Is the compliances are same for C Corp and S Corp? Little, I would say, like it's not same as it is. The compliance part for the C Corp is like because C Corp they have to pay taxes at the C Corp level, and S Corp they have to pay taxes at the partners level. So the complaints are not same. And I could see one more question. The certificate of incorporation would show the type of constitution. No, it will not show the type of constitution. However, if you can see the certificate of incorporation, if the company is being incorporated as a LLC, the names and the name will end with LLC most probably. And if it is a C Corp, it will show as a INC, or it will show as Inc. or some other. Means like it is not same.
Okay.
And can a LLC convert into C Corp and vice versa? Yes, it can be converted because LLC is like a partnership conversion to private limited.
Okay. Vinay, you have a question? Please unmute yourself or write in the chat.
Good morning to everyone. I'm writing in the chat. Just a small question, sir. I'll write it.
Sure. whether Indian companies will have to be careful. This is answered. Any views? Reconstitution, annual obligation, online, ongoing obligation.
Whether Indian companies will have to be careful about the type of entity when receiving investment. See, why it is, yes, I will tell you the foreign assets, if they are holding, even it is by private limited or by a individual from India, they have to declare, because now the Black Money Laundering Act has come from 2016. The implementation of the Black Money Laundering Act is so stringent in India, and I am dealing with 3 cases now just because of Black Money Laundering Act. So means like it's better to comply with the investment where means like where that is a private limited company in India or as an individual, if they have invested in foreign institutions or anything, and if they are holding a bank account or if they are holding a shareholder account, please be careful and please show it in their income tax returns in India.
Okay. Vinay Shetty has question, Ravi. What is the initial cost for setting up of LLC?
That depends on the state and it depends on the number of partners and the requirement. So you can consider around $500 as a base this thing.
And this includes the cost.
Yeah,
of
because if they choose Delaware, $500 will be enough. If they choose Texas, because each state have their own tax component, so that's the reason. Like it depends on the state. Now that in Indian law allows for cross-border mergers, are there corresponding laws in USA? Mergers law allows for cross-border mergers. Okay, it can be a subsidy. It can be a holding company and subsidiary company concept you can bring in here, and mergers and acquisitions. I think mergers means see, whatever the incomes you generate in India, that is taxed in India, and the incomes generated in US, that is taxed in US. So mergers both the countries, we need to comply with the laws. That's the only point I can say for this question. How the India laws allows cross-border mergers.
Okay. I think Vinay has another question.
Which is more useful to companies, LLC or S Corp or C Corp? I would say if you are a small, please go for the LLC. Why? Because the profits, whatever you make on the LLC, it will get taxed at the individual level. It will not get taxed at the C Corp. So if you are starting a C Corp, you please you will get taxed at standard rate of 21%, and the profits are happily you can means like after that, like what the profits are there, that you can just is for the C Corp only. But LLC is what I would prefer.
Okay. Ravi, I hope this, Vinay, I hope this answers your question.
Yeah, I'm happy with the answers, and I got all the answers. Thank you.
Thank you.
We can move on to the next slides.
Yeah, Ravi. Now coming to the second half of our session, which is the beneficial ownership interest. Now this is going to be interesting. This is a new topic which has come in the US, and I don't know whether how many people have heard about it. So yeah, this should be a very educative session, part of the session for all. So now what happened was in 2021, In 2021, the Congress enacted the Corporate Transparency Act, introducing a new requirement for small business entities such as LLC and corporations to report identifying information about their beneficial owners. Beneficial owners are individuals who own at least 25% of the business or exercise substantial control over it. The law provision took effect from 1st of January 2024, obligating many small businesses, including registered investment advisors firm, to submit a beneficial ownership information report to the Treasury Department Financial Crimes Enforcement Network, which is in short called FinCEN. This reporting aims to enhance the transparency and combat financial crimes. So what we have learned so far is it's a new act which was passed in 2021 and became applicable from this year 2024. It is a beneficial ownership interest disclosure which you have to make for people who are owning at least 25% of the entity or have certain substantial control over it. This is to be submitted with the Treasury Department Financial Crime Enforcement Network, which is in short called FinCEN. So anybody can tell me in Q&A, or they can raise their hand if anybody knows what is the equivalent of FinCEN in India. So we have FinCEN in the US. Anybody can raise their hand and let me know what is the equivalent of FinCEN in India. Because technically speaking, I don't know. So this is not something I'm asking because I know I want to know what is the equivalent of FinCEN in India.
We have what is known as a declaration for beneficial ownership.
Okay.
We need to file it in India also.
No, that is with the MCA. That I understand. So 10% SBO one.
Right.
Somebody is saying FIU. So what is the FIU? I don't know.
It's called the Financial Intelligence Unit, which is tasked with the responsibility of overseeing if any financial crimes are being committed, and then liaising with other departmental authorities to take necessary legal action.
Okay. And do they in FIU also they have some reporting and reporting compliance like this one? See, SBO is different. What sir is saying, SBO is different.
FIU. Yeah, as per we have the Prevention of Money Laundering, the Benami ownership, and the AML laws in India. We need to report some financial transactions, suspicious financial transactions with the FIU, and have some high-risk entities registered with the FIU as well.
Okay. Praveen, you have any,
Yeah, just to add to what Rajat is saying, basically various countries, including US and India, are part of the FATF, which is a Financial Action Task Force, which is working on tracking the funds into the terrorism area and other those things. So for that, as you said, FinCEN, India has FIU. So these are basically kind of ministries, or you can say departments created under the ministry to track all these financial transactions. So under these regulations, these countries are committed to make changes within their laws so that this reporting is compulsory. And one of the common practice across the globe is making the professionals responsible for making these reportings as well. Not just the companies and the owners, making the professionals also responsible. So the idea is to have as much information as possible as to from where the money is coming and from where the money and to where the money is going. So that's how all these things have been designed, and respective countries have set up departments within their government. So as you said, FinCEN in US, FIU, Financial Intelligence Unit, under the Ministry of Finance in India. So that's how this structure works.
Okay. So I hope Rajat, Praveen, and we can come together to have a session on this one in the future.
To add with what very appropriately pointed out, FATF actually it asks its member nations to implement relevant laws, and it periodically conducts monitoring checks. So the FATF team visits the countries, the member nations, and they prepare a report. Based on that report, it classifies countries on white list, black list, or gray lists. So accordingly, you have countries' economic stability and how good is it for an investment destination decided. So we did well. As per the recent report, India did pretty well.
Okay. So I think we had we have some good information on FTF and all, FIU. But our topic is for beneficial owners, so I think we should move ahead with it. Yeah. So moving ahead. So ultimately, what is the target of this new law? It is to reveal the true identity of the individual who ultimately own or control a company, even if it is held under another entity's name. Director directly or indirectly owns or control of at least 25% of the company's ownership interest. This includes both direct ownership through shares or indirect control through other means. And this is very much, I think, related. I mean, the percentages may be different, but it is very correlating with the Significant Beneficial Ownership Act, which came in, I think, 2019 or something in India. But that was by MCA, and this is ultimately in the US. It's from the Treasury Department. So, what do you mean by significant control over the company? This could involve decision-making authority or influence over the company's strategic decisions. The focus here is on identifying individuals who have substantial influence over a company's operations, whether through ownership or control. What is the importance of this act? It will lead to more transparency in financial systems, prevention of money laundering and fraud, as Rajat has also said, and Praveenji also said that prevention of money laundering and all is the main target of these type of reportings, and ensuring compliance with international regulations. Again, this was, I think, pointed by Rajat of the FTF task force and all, and Praveenji also. Now, the interesting part, who needs to report? This requirement applies to all companies registered through official filings with the state secretary or similar office in the US, including all type of corporations, the C Corps and all, irrespective of their size or scope. The limited liability companies, the LLCs, both single member LLCs like those for real estate and multi-member LLCs for small businesses. Other entities, any other officially filed entities like the S corporations. My question to the participants, whether sole proprietorship will be covered under this type of act, or the general partnership, sole proprietorship and general partnership, whether they are going to be covered. Please raise your hand and we will allow you to answer this question, please. Ravi, can you tell the people about this sole proprietorship and general partnership?
Sole proprietor, no, I would prefer to answer on the BOI concept, because this BOI concept has come like recently, and which is mandatory for all the C Corp, S Corp, partnership, LLC, whatever the name it is, like that is mandatory for all the people, and the deadline for BOI is like December 31st. So if you are having any company in US and if they have not yet filed this BOI, please inform them to get it done by end of this month.
Okay, Ravi. Yeah. So moving ahead. Reporting deadlines. All practicing CA, we always ask about what is the deadline, what is the deadline. So that is why the slide is for us only. What is the reporting deadlines for BOI information? For companies which have been created or registered before 1st of January 2024, these companies must submit their initial BOI report by January 1st, 2025, providing a 1-year window to comply. This means the deadline is there. For companies or created or registered in 2024, these entities have to file the BOI filings by 90 days from the date of their incorporation or registration. The deadline emphasizes the importance of prompt reporting for the newly established companies. For companies created or registered on or after 1st January 2025, the reporting windows tightens, with these companies having just 30 days to file the BOI report. This means the government is very serious about these regulations, and they want to make sure that as soon as an entity is registered or incorporated, it must report about the beneficial owners of the entity. Moving to the penalties. The Corporate Transparency Act imposes strict penalties for non-compliances with BOI reporting requirements. Civil penalties, individual or entities that willfully fail to comply may face fines of up to $500 per day of the violations. This can accumulate quickly, leading to substantial financial penalties. Obviously, $500 is a huge amount even for a day. Criminal penalties, more severe consequences include up to 2 years of imprisonment and a fine up to $10,000. These penalties apply to those who have willfully failed to file, submit false information, or neglect to update previously reported details. Has this been implemented for the entities incorporated in 2024 yet? The short answer is right now no, but soon it will start. So in case you are a professional who have incorporated any entity in the US for one of your clients and not filed this one, already 90 days have passed. Please file this form right now immediately, because anytime the penalties can start, and with the new regime coming in the US, they will further tighten this, because there is a lot of noise about immigrants incorporating entities in the US and all. So this will further become stringent. So this was our part B of our session, which was covering beneficial ownership interest. We'll have a 30-second break. Any question regarding this, please feel free to raise your hand, and we will make sure that your question is heard. Ravi, any inputs from you?
Yeah, for this BOI is like it's like very minimal kind of a thing. Means like it's not complicated reporting. It's like that for that particular company. Means like just we need to put the EIN of the company, and we need to mention the names and supporting documents of, means like either it could be driving license or the SSN or the passport copy of that. Like we just need to upload the respective beneficial ownership details and complete it. This is not a much complicated reporting, but it is to be complied mandatorily.
Okay. So more about a disclosure entity, not very much complicated. Can be done.
Process.
Okay. Thank you, Ravi. I think we don't have any question for this part, so we can move to our Rohit has asked, compliances better in India or the US?
Of course, it's better in US.
Stringent in US.
Yeah, stringent in US, but the process of the compliance is not much complicated.
In India, it's complicated. Okay.
Okay, now we will just move to our third part, the final part of the session. So in our earlier part of the session, we have talked about why Delaware has moved so much, have gained so much prominence, especially with the foreign individuals and all who want to incorporate an entity in the US. So this will be a short part of our session on why Delaware has become so relevant, why it has become so hotspot for entity incorporation. So just for the benefit of the participant, you can see where Delaware is located. Delaware is a state in the US, and it's a very small state. Delaware stands as the US second smallest and sixth least populous state. It is most populous city. Wilmington serves as a state economic and cultural center, while Dover holds the title of its capital. Despite its size, Delaware boasts a significant economic presence, ranking 43rd among state and Washington, D.C. And in terms of economy size, in the third quarter of 2023, the state recorded a real GDP of $86 billion, demonstrating its economic vigor. Remarkably, Delaware has emerged as the preferred destination for the legal incorporation of various entities, particularly those led by non-US citizens. So you can see in terms of size, it's very small as compared to other states of the United States. But in terms of economy, in terms of incorporation activities, it is a leading powerhouse in the US. In our other slides, we will see why. So this is just a short slide we have prepared. Delaware's popularity for incorporation. First point is business-friendly legal framework. Court of Chancery specializes in corporate law. So Delaware was one of the first state which established a court for corporate matters very soon, very early. And that is why Delaware laws are very, they are not vague laws and very clear with what the corporations are required. And this means that it's a very predictable legal environment. And I know when we say predictable, the connotations are negative for most of the things, but when coming to compliances part, you want to have a predictable legal environment. Point 2, tax advantages. No state corporate income tax for businesses operating outside Delaware means if you have any entity, if you have any businesses from outside Delaware, that is not taxed in Delaware. There is no sale tax on intangible assets. Point number 3, flexibility in company structure. Minimal requirement for board meetings and operating agreements. Wide discretion in internal management. Fourth, reputation and credibility, preferred by investors and venture capitalists. So if you see the point 1, 2, 3, because of point 1, 2, 3, the fourth point has come into picture because they have so much given flexibility and predictability and such a good legal system. The reputation and credibility of ventures in Delaware is very high. Statistics, over 60% of Fortune 500 companies of the US are incorporated in Delaware, and that's a huge number. Now we will just have a brief discussion on what is the taxation system in Delaware. Delaware's corporate law offers substantial flexibility and protection to companies. Notably, it hosts a specialized legal system called the Court of Chancery we discussed, which specializes in businesses-related disputes. Renowned for its expertise in corporate laws and efficient resolution of business conflict, this court system provides businesses with predictability and consistency in the legal matters, fostering a stable and reliable business environment. Additionally, Delaware tax incentive further enhances its allure for businesses. The state favorable tax structure include exemptions such as no corporate income tax on earnings from operation outside the state. Businesses are subject to annual franchisee fees, typically starting from $225 to $200, subject to the size of the entity. Such tax advantages translate into significant cost savings for businesses, enabling them to allocate resources more efficiently and fuel their growth. Ravi, can you just elaborate this point? What do you mean by the franchisee tax and all for the benefit of the participants?
Yeah. Here, see, if you just incorporate a company in Delaware, the business only the incomes which are earned within the Delaware are taxed for the Delaware, because some states, wherever you earn the income, the particular state, you have to report that income and you have to pay state tax for that particular income. But for the Delaware, the advantage is that, like, if you earn outside the state, no need to pay any state tax for that income. So that is state taxes. The Delaware has given that option.
Okay, Ravi, thank you.
And one more point I would like to add for the Delaware is that, like, virtual address also will be accepted. It's but if you want to incorporate a company in anywhere in US except Delaware, you have to provide, means, like, if you want to incorporate a company in India, you have to provide a physical address, rental agreement, that EB bill and all, right? But for the US, but for the Delaware state, only for the Delaware state, you can incorporate with a virtual address. It's not mandatory to be physical address. But if you incorporate a company in Texas, you have to provide the documents for that particular address. But in Delaware, only the option is that, like, you can go with the virtual address. That's one simple advantage the state has given.
Okay, Ravi.
Yeah. Then we can
Moving ahead. For foreign nationals such as Indian incorporating entities in Delaware, Delaware offers additional benefits, including exemption from inheritance tax on stock holdings of Delaware-based entities for non-Delaware residents. Moreover, non-residents owning shares in Delaware corporations are not liable to Delaware taxes, facilitating the smooth transfers of investment to heirs in the event of death without added tax burdens. So this means that if you are non-resident, you have certain investment in Delaware, and you want to pass on to that your assets to your future generations, it is not taxable in Delaware for the Delaware entities, which is a huge thing because a lot of Indian entities, a lot of Indians are having entities, assets in Delaware and all, and that when it is transferred to their future generation, it won't be taxed. Ease of incorporation. The ease and cost effectiveness of incorporation in Delaware serve as a significant incentive for businesses. Incorporation process can be expedited with entities often established within a day upon payment of appropriate fees. In India, even approvals for LPR and private limited are taking 14 to 20 days. Any comment? So we see what is the difference. Delaware is actually doing the talk. What they're talking, they are working on it. India, right now, we are saying that we want to have a ease of doing businesses, but you see, even name incorporation is taking 15-20 days. Name approval. Privacy of information. Delaware offers privacy protection for business owners. Unlike some other states, Delaware does not require companies to publicly disclose the identity of their shareholders or directors in their formation documents. This confidentiality can be attractive to businesses seeking to maintain privacy and protect sensitive information about their ownership structure. Obviously, with the new federal BOI laws which we discussed, this is going to be some sort of a conflict because Delaware, even though Delaware is not asking, but the federal laws are now asking for the details of the significant owners. So with this, we have covered our Delaware part also. Anybody has any question, they can please feel free to raise their hands. We'll have a 10-second break and then we'll go for the closure.
In India, we have a softwares like Probe 42, which gives the entire data about a company. Is there anything similar to that where we can check the credentials of a company?
You can check only the name of the company and the address in the respective states, but you cannot check who is the owner or who is the means like you will not get the financials of the company from anywhere in US.
Oh, but you can't do inspect because Probe 42 gives us any litigation against the company and its financials, all the incorporation documents and various filings from date of incorporation till date. All the
That
data
is a paid service. Yeah, that's a paid service that will be.
but it's a token payment. It's not a huge payment, but even otherwise, but there's the service available at a token payment. But we don't get that data in. Suppose I want to see the balance sheet of a particular company, I can't see.
No, you cannot see.
But then that is a serious restriction, no? Or you call it confidentiality.
It's a confidential, I will say that.
Okay.
Rajat, please feel free to ask your question.
That was a very insightful session and good insights on Delaware, especially the Code of Chancery. I would have, request FinTrack advisors to have one session dedicated on the workings in Delaware. Recently, there's a case where a tech company, the shareholders of the company voted in favor of providing remuneration or director compensation to their majority shareholder cum director. So even if the shareholders in majority voted in favor, the court struck down the resolution. And after that, the shareholders ratified the motion once again. Then the court struck down once again. So I would like, Mr. Ravi Kishorji or, FinTrack to have one more dedicated session on this topic sometime later this month or next month. So we'll have good insights on this particular landmark judgment.
Definitely, Rajat. I've taken note of this and we'll definitely have the session in the near future.
Okay. And in the Delaware, as Rajat mentioned, we can get the incorporation in hours. Means within a day, we can incorporate the company and we can get the COI on the same day.
True.
That is the beauty of Delaware.
So we are now moving to our last slide for the day. This is an out of syllabus topic, mean that this topic we were not there in our profile for today's session, but we just added because we thought that as Indian practitioners, mostly because the participants mostly are practicing CS and all, so they should be able to tell their clients what is the idea, why it is beneficial for them to have an entity in the US. So we'll just take 2 minutes of your time for this. So access to a broader market. With the world's biggest consumer marketplace, the US provides Indian businesses with a diversified and affluent clientele. Indian businesses may tap into a sizable market and generate sales and income streams with the presence in the US. The US accounts for approximately 82.6% of its GDP in terms of final consumption expenditure. This clearly shows that US is a highly consumption-driven market where consumers are ready to pay big bucks. Closeness to creativity hubs, establishing businesses in tech hotspots like Silicon Valley gives Indian enterprise unrivaled access to talent and state-of-the-art technology. Proximity generates collaborations, simulates research and development, and improves competitiveness globally. The USA attracts the brightest of minds from the world, which is reflected in the fact that it is still the #1 country in terms of world accepting international students. Attracting funding and investment, venture capitalists and investors looking for exciting prospects continue to be drawn to the US. Indian businesses may draw significant investments by establishing a presence in the nation, supporting their expansion goals, and improving their financial position. The USA leads in total international investment, easily beating its wealthy rivals. Increased brand visibility. A physical presence in the US helps Indian firms become recognizable and trustworthy to American enterprises. Partnership, teamwork, and profitable businesses prospects become accessible as a result of this enhanced exposure. In a study conducted in 2022, USA was ranked 1 in brand power ahead of countries like Germany and China. Making use of favorable regulatory environment. The USA has a regulatory environment that is conducive to a business and is marked by strong legislative framework, open governance, and policies, and that are investor friendly. Indian businesses may make use of these advantages circumstances to successfully negotiate complexity and prosper in the market. The USA has been consistently ranked in the top 5 in the world in ease of doing business. Reducing geopolitical risks. Reducing the geopolitical risk and strengthening resilience against economic uncertainty and geopolitical tensions may achieve by diversifying activities across the international boundaries, especially in a stable and developed country like US. Now we are seeing how much geopolitical tensions are in throughout the world. So US can be a beacon of light for such people that still it is having as democracy and a stable government. Access to global talent pool. Setting up of office in the US gives Indian businesses easier access to a large pool of highly qualified workers, which promotes productivity, innovation, and creativity. Use of this varied talent pool boosts competitiveness internationally and expedites progress. And finally, strengthening supply chain networks. For Indian businesses, being close to important distributors, suppliers, and partners in the US simplify supply chain logistics, cut lead times, and improve operational effectiveness. The strengthened the network can provide clients with good services. So this was all for our session today. Any question so far in entire session? For the entire session, if anybody has any question, please feel free to ask now. I hope this session was enlightening and educative for all of you. Rohit?
Yes, Neeraj, it was very educative and it was a wonderful session. Thank you, Ravi. Thank you, Neeraj, for that. So,
Rohit, can you
anyone
present the
have
vote
any
of
question? Can
Rohit, can you present the vote of thanks to Ravi?
Thank you, Ravi, for such a wonderful session. Neeraj, can you share the
Thank you.
certificate?
Sure.
Yeah. And if there is any query on the US incorporations or on the BOI or on the taxation or the formations or anything, they can reach out to us at the admin at FinTrack Advisors. Always, that's always this thing.
Even feel free to directly text me, call me, anybody have any query, and we will try to make sure that this is solved. And all the content which have been talked about today is present in a form of a blog. The session is also being recorded and will be uploaded in YouTube soon. Ravi, this is a
Yes.
certificate of our appreciation for today's session. I hope that we have another session with you for Delaware and all, and we will look forward to the sessions.
Okay. Okay. Yes. Thank you.
With this, we will be closing the session. Thank you all for joining. Hope you have all of a wonderful Sunday. Thank you.
Thank you, Neeraj.